My name is Andrew Stotson. I want to welcome you to the Valuation Masterclass Bootcamp presentation. We're going to see a presentation in just a moment by one of our students, Alok Chandra, who is going to present on the company Air Liquide. And it's exciting. And for those people who want to gain a competitive advantage in company valuation like Alok is doing, make sure to join us in the next bootcamp. The next bootcamp starts in 38 days, and you get a massive discount if you use the coupon code BC22Live at valuationmasterclass.com/bootcamp. So without further ado, I'm going to bring Alok in. All right, the moment has come. And at least you have a nice swimming pool in your backyard that you can jump in afterwards to relax, right?
Yes.
I'm curious. Let's talk to the audience a little bit about you. First question is, before let's say 2 weeks ago, had you ever heard of a company called Air Liquide?
No, never.
And so how many days or weeks have you worked on this research project?
2 weeks in total.
And as I always say to my students, that many analysts that go to work at a broker, as an example, or an investment bank, they take months before they write a report. And
Yes.
so in 2 weeks, you got a lot done.
Yes.
So I'm excited about that. Maybe just tell the audience about, where you were at when you first joined the Valuation Masterclass Bootcamp in your life.
Before boot camp, I didn't know what to make of company data, and I wasn't that confident about financials when I looked at any company's financial. When I came here with great teacher like you and great team like with Momin and even the students, you all have kept me on my toes, and it has given me a edge in the competitive world. It has improved my financial knowledge and added to my personality as well. So overall, this boot camp was a good decision that I made. One of the good decisions.
Standards of excellence.
Yes.
Yep. And it's been great having you in the, all the live sessions and stuff. Before we get started, Lee says, go for it, Alok, you've got this. And also, Udavir says, good luck. And Vito says, break a leg. Tanachot says, let's go. DP gives you a muscles, flexing your muscles. And Roman in the US says, now is the time. And we also have another person here, Tanapong. Okay, so let's try it. Let's see what we've got. I'm going to share the screen here. And I think we're pretty much ready. So in just a second, I'm going to remove myself, and then you just take it away. All right?
Okay.
Okay, so I'm going to remove myself. Everything okay? You ready?
Yes.
Okay, I'm going to remove myself now so you can start now.
Hey everyone, this is Alok Chand as introduced by Dr. Andrew, and I initiate coverage on Air Liquide with a buy recommendation based on a target price of 200 euros, which implies an upside of 13%. I derive my target price from an FCFF based valuation using a WACC of 8.4% and a terminal growth rate of 2%. Now I'll dive into the background of Air Liquide. So, headquartered in France, it's a leading global industrial gas company with 29% market share. It provides essential gases for manufacturing, steel, chemicals, and it supplies medical oxygen to hospitals and also offers home healthcare services for chronic patients. Besides this, it delivers gases vital for electronics manufacturing like semiconductors. In recent years, it has invested in energy transition and focused on securing long-term contracts to strengthen its position and ensure stable cash flow. Now let's turn to the key growth drivers on the left. Under its advanced strategy, Air Liquide is cutting costs and energy used by applying AI in logistics and operations. Even in volatile power markets with price spike, this strategy already delivered a tangible 497 million euro in savings and lifted the operating margin by 1% in 2024 alone. Hence, I expect this strategy to lift the EBIT margin further from 20% to 22% by 2029, which is a notable gain in an industry with stable margin. Next, its healthcare revenue grew 4% in 2024, driven by an 8-9% rise in oxygen demand from aging population and chronic diseases. Europe's healthcare market is also on track to grow at 5% CAGR through 2029, and Air Liquide's low carbon gases and long-term contracts give the company an edge. So I expect this segment to add 1.7 billion euro in revenue and lift its share of total revenue from 20% to 30% by 2029. Then Air Liquide's expertise in ultra-high purity gases vital for semiconductors gives its electronics segment an upper hand, driving 3.5% year-on-year growth even in soft cycle. Its long-term agreement ensures pricing power. The electronics segment is also set to benefit from projected 14.6% CAGR in global semiconductor fabrication over the next decade, because it will naturally drive demand for the gas required in the process, and the company has already announced 4 billion capex to capture this opportunity. So I expect this segment to lift annual revenue growth from 2.6% to 3.6% over the next 5 years. Taken together, these drivers position Air Liquide for robust growth. Now let's talk about its recent financial performance. In the first half of 2025, Air Liquide revenue rose 2.6% and gross margin increased 3.8% on an year-on-year basis due to advance-led cost saving. Its recurring EPS grew up by 5.1% year-on-year basis, supported by strong performance in electronics and healthcare. So the financial certainly looks promising, but what about the constraints that can hinder its growth? Let's take a closer look. Looking at the capital section, the graph on the top right corner shows Air Liquide cash conversion cycle increasing. However, it is rising due to the strategic expansion into hydrogen and healthcare, which requires more inventory and involves slower paying clients like government and large industries. They are also building buffer inventory to avoid supply chain risks. So it's not a sign of poor operations. It reflects long-term planning, and strong cash flow and margins shows that capital is not a serious constraint. Similarly, moderate barriers lies in operations because even though its advanced strategy optimizes the operations, hydrogen projects face execution risks due to regulatory hurdles and supply chain dependencies, making operations a neutral constraint. Like this, market and people are not a major constraints either. So overall, constraints to Air Liquide growth are neutral. Now let's explore how Air Liquide generates its revenue. So its gas and services segment contributes about 95% of the total revenue. This includes supplying gas to everyday industries like food, automotive, and large industries like steel and chemicals, as well as healthcare and electronics. Whereas global markets and technology segment driven by hydrogen mobility and biogas contributes a minor 3%, and engineering and construction contributes only 2% to its overall revenue. And geographically speaking, as the pie chart shows, its revenue is balanced, with Europe contributing 44%, Americas 27%, Asia Pacific accounting for 26%, and a small 3% contribution from Middle East and Africa. So the revenue is well diversified. Now let's talk about stacking in FBMR framework. Overall, Air Liquide shows a moderate profile relative to 13,670 non-financial companies in the world, with all four pillars: fundamentals, valuation, momentum, and risk ranking nearly average, because fundamentals shows decent margins and returns, but are pressured by shorter asset turnover, and valuation multiple seems expensive, reflecting premium positioning, whereas momentum is weighed down by EPS growth, and its below average is in risk, but a low beta indicates stability. So it's got a relatively moderate FVMR profile, but its market position is strong, as we will see next. Air Liquide scores 72% in Porter's five forces, showing solid market strength. Rivalry is intense among global players, but steady growth and stable core operations keep it manageable. Supplier power is moderate as energy inputs are concentrated, yet long-term contracts help reduce risk. Customer pressure is balanced. Buyers are price sensitive, but reliability and compliance limit switching. High entry barrier and few viable substitutes secure Air Liquide's durable moat, reinforcing its long-term market strength. Now I'll compare its performance to the world. In WCB, Air Liquide has held #3 rank in profitable growth through the PTM, reflecting steady but not top tier performance. Profitability has improved to hash 2, driven mainly by strong expense control. Asset efficiency has remained a relative weakness. Growth has been stable at hash 5, supported by improvements in revenue growth, though there remains a big room for further progress. Now, next three slides separately showing the ranking I just discussed. Now, let's move to ESG. Air Liquide scores 87% overall, and environment efforts are robust, though past incidents like 2016 Florida explosion weigh in on the score. But it shows a standout performance in social responsibility. And it has got strong governance, but because of an insider trading case in 2017, the score is a bit lower. So the ESG Foundation supports operational strength. Now let's turn to financial forecast to evaluate future growth. I forecast revenue and net profit to grow in line with past and my stories. Next, I'll talk about assets. And its total assets are increasing in line with company's expansion plan. Then its liabilities on the following slide. These can be seen increasing moderately. And the company is a high cash company and its ending cash flow is positive and growing. Moving to ratios. EBIT margin is increasing as I discussed in stories. And here I expect the capex to increase as the company plans to continue expanding. Now I'll discuss its relative valuation. On the forward 2025 PB multiple, AIRP trades at a premium relative to France, Asia, Japan, and global market. Its premium valuation is justified by its superior ROC, stable cash flow, and leadership in high margin industrial gases. On the forward 2025 EVE to growth multiple, AIRP trades at a discount compared to France and world average. Now I'll elaborate how I arrived at my target price. So I assumed a risk-free rate of 1% and a market equity risk premium of 9%. With a beta of 1, this results in a COE of 10%. The capital structure comprises a 20% debt and 80% equity, leading to a WACC of 8.4%. In my base case scenario, I anticipate performance leading to a value of €200 per share. This represents a 13% upside from current. In my sensitivity analysis, the FCFF value ranges from €205 to €195, where when we increase or decrease the gross margin by 2%, both of which are above the current price, as can be seen in the red box. Now, while my valuation points to a target price above the current market value, it's also important to consider the factors that could influence this forecast. So let's take a look at the risk that could affect it. So the main risk for this company is exposure to energy price volatility because industrial gas production is energy intensive, making profitability sensitive to fluctuation in electricity and natural gas prices. Sharp spike in energy cost can compress margins and disrupt supply contracts. Though the company has implemented dynamic pricing to counter it. Now, having explained all that, I give AIRP a buy recommendation based on its strong growth drivers, resilient margins, and rising demand for industrial medical gases, for which AIRP is positioned well to deliver with long-term strategic contracts across the globe. That concludes my presentation. Now I'll pass it back to Dr. Andrew.
Okay, so excellent. One of the questions I have, I mean, this company is already pretty huge and they've really penetrated the world. What is like the long-term growth potential for this type of a company? And let's think long-term, the next 5 or 10 years. Is it going to grow at 3 or 4 or 5%, or is it going to be 10%? Like, what do you think is the potential?
It's 5%, around 5-6%. That's what they are contemplating.
Right. And so how should someone look at this type of a company as just a stable type of company that you can have in your portfolio that doesn't move that much and just steadily goes up? Or how do they look at this company?
Yeah, it is a stable company. And if, let's say, the hydrogen transitioning project that they're working on, if it works, if they play well, then there can be a huge spike in their share prices.
So let's go into that. I know DP's got a question saying hydrogen is getting a lot of hype. Do you think these projects will deliver as expected, and how are they reflected in your valuation?
Yes, there's a hype.
Maybe before you answer that, explain to people that are listening and viewing that don't understand what the hydrogen business is for them.
Okay, so hydrogen transitioning means before when we used coal for getting hydrogen. So we were getting 1 kiloton of hydrogen from, and as a byproduct, we were getting 30 kilotons of carbon dioxide. So that was a lot of environment damage was happening. So then we started producing gray hydrogen, in which we were capturing this most of this carbon dioxide exposure byproduct, like 70%. So it's called gray hydrogen. And then there's blue hydrogen and there's green hydrogen. So in this green hydrogen, there is no carbon dioxide at all. So this is hydrogen transitioning, in which we make hydrogen with least possible impact on environment.
And so what is the success of that? What is the potential of that? What are the risks of that?
Okay. So right now it's not giving as much revenue as should, as it is in very early stage. It is adding about 1 to 1.5% of total revenue to the Air Liquide. But if everything happens according to the plan, then the company says that by 2025 and by 2050, it might add up to 12% to 13% to total revenue. But it all depends on big ifs. If we can say, like, if political wind doesn't change, and if demand grows as expected, and if another better alternative for hydrogen doesn't come up in the future. So a lot of external factors. That's why I haven't even given much value to hydrogen transitioning in my valuation.
Okay. All right. And Moman says it's the PE is not cheap. I wouldn't say it's overly expensive, but EPS growth is not fantastic. Why do you say buy now?
Okay, so it's a premium valuation because only company with procurement ready certification. It provides end-to-end traceability, which helps its customers to meet ESG quota easily. And uh, and also they are providing on-site generation of gases and abundant clinical service, which makes it very hard to switch the buy like switch to the peers. So that's why it gives them the premium valuation.
Okay. And Moman also said, I see the stock's recently been stable. What do you see? Is there a catalyst, or how do you look at this stock?
uh, well, all the key growth drivers that I've discussed in my story, uh, according to my estimate, as they have already given a tangible growth revenue. So with rising demand in industrial gases and healthcare demand, and companies' strategic policy, I think that there is definitely going to be it should go up. The price must go up.
And can you go to your ratio page? Because I want to look at the cash conversion cycle.
Yes. Sure.
Oops.
Some. Give me a second.
Yep.
Yes.
Little technical difficulty. That's okay.
Yeah. Sorry about that.
Okay. Can you get it back up on the screen, or?
Yeah. Is it not back on the screen yet?
No, I don't see it. You're gonna have to reshare.
Okay. Give me a second for that.
Yep.
Okay. It is
All
now.
right. Okay. So yeah. So the reason why I wanted to look at it is because Vito asked the question, do you see increasing cash conversion cycle as a major or minor risk to liquidity? Let's talk about what's happening with cash conversion cycle.
Okay. So it basically reflects the expansion into the business that require more inventory, and they are building inventory to avoid supply chain risks. So it reflects in cash conversion cycle being positive.
So do you think that it's a problem, or it's not a
No, it's
problem,
not. It's
or?
not a problem. It's just they're like, in case of, it's like a rainy day preparation, you can say. And also the increasing as they are expanding in the business, they require more inventory, like hydrogen, or in healthcare services, all the gases. So that kind of thing.
Okay. And Lee asked, which business within the gas and services segment do you think has the strongest growth prospects?
It's definitely the industrial segment because that's the biggest revenue contributor to the gas and services.
Right. DP asks the question, what can change the whack? How sensitive is your target price to whack?
Okay. So Air Liquide is a very stable debt levels. Air Liquide has a very stable debt levels, and with long-term contracts, its wax mostly gonna stay moderate. But as macro risk involves like energy price hike and maybe like energy transition investments, so they increase perceived business risk that can change back, that can increase back, and if like let's say if we increase back by uh, plus minus 50 basis points, that it will give a fluctuation of plus minus 10-12% to the WAC.
Okay. And another question from Superkid says, do you think that the company's recent acquisition of DIG Air Gas would drag its operating margin down like its 2016 Air Gas acquisition? Do you think its acquisition strategy is going to destroy value?
Oh, it's not going to destroy, it's definitely going to add. They are actually trying to gain more market share in Asia. It's in Korea, that acquisition, and that will definitely give them an edge in Asia markets, emerging markets.
Okay. And we got a question from Melwin who says, this is a high quality company, but seems reasonably priced. Is 13% upside enough to have a margin of safety?
uh, it's basically if I give you a little bit of data about their backlog strength of 4.5 billion euro diversified investment pipeline. So they have a backlog of 4.5 billion euro. So that means they have a lot of demand already, and which is which is a good thing, and it's a very resilient company. It has proven ability to grow in net income and EBIT across cycles, because as it has healthcare department which is not dependent on cyclical downturns.
Okay.
So I think 13% is a good and
Okay.
moderate. Yes.
And Tana Cho says, considering that the energy transition is a sole catalyst in this industry for upcoming years, how far ahead is the company in project relative to peers, in this project relative to peers?
Well, they are doing two major projects right now. One in Texas, an electrolyzer project, and another in Netherlands. And but as these are not the main push. There are some regulatory norms for environment protection. That's why this company and all the companies has to do this, and they will yield maybe. But if everything falls into place, like I explained before, and it if they yield, it will show results by 2035 or 2050, not in the recent 5 years, next five
Okay.
years.
So how does it feel to pass this great assignment and make this great presentation?
Oh, it feels great. It required a lot of work, and uh, it made me a better person, I think, in overall, because just preparing for something and having the pressure that anything can be asked, and in a short time. And the more I researched, the more things, it's like an onion, and more layers kept coming. And I was like, what's now? What? This is new. This is new. So I have to like kept keeping notes of every single thing and make sure that I remember every single thing in the right way and align it with my stories and give the right forecast so that
Yeah.
I do
And
my yes.
when let's go back a week ago when you had your first week working on the company. How is your knowledge now compared to then? I know for everybody they're you're frustrated because you just don't know it that well.
Yeah, so a week before, even when I started, I was like, "What is this Air Liquide?" And first, I was just looking at it as a gas company, and then I saw key stories, somebody mentioning healthcare, and I was looking into it too. And somebody said transition, and then I saw these transition is a big story. While I was working on it, I felt like it's not giving much revenue. I mean, there were a lot of stages at which I realized that transition should not be my focus, and these things should be focused, which I have mentioned in my stories. And but by the end of the second week, I was also considering like everybody just talking about transition. It's because it's a new thing.
Mm.
And so I would say that I've gained a lot of knowledge about this company, and and I have learned the process how to dig deep about a company when I actually have to value that company.
So you got a lot of nice comments. Here's from Melwin saying, very good presentation. I can see the effort you put in. Well done, Alok, and connect on LinkedIn.
Thank you. I
Uh,
do.
also, Vito says, way to go, rock
Thank
star.
you.
And Superkit says, your CCC analysis was on point. And Roman says, great presentation. And you got a yay from Moman. And also Lee said, fantastic work and well done. And Tanachot says, you nailed it. So how, how do you compare your skill in writing a company research paper today compared to when you first came into the Valuation Masterclass Bootcamp?
So there's a movie Night and Day in which uh, you Tom Cruise says that with me, without me, with me, without me. So that was me without you, and now me with you.
Yeah,
That
that's great.
stays.
Yeah. I mean, and that's what I love about doing the Valuation Masterclass Bootcamp is that I want to deliver transformation that leads to lasting change.
Yes, yes,
That's my
and you,
why.
yes, sir. You certainly have made a very huge impact as a teacher. I will always remember you as a very good teacher, and all of my great teachers throughout. Yes.
Well, congratulations on that. And now you get to relax in the swimming pool behind you.
Yes, sir. Of course.
And we'll see you in Slack, and then we'll see you in the group on Monday.
Okay. See you.
Enjoy the
See you, everybody.
weekend.
Thank you.
Yep.
You too, sir. Thank you.
Well done. Well done. Well, that was impressive. Remember, he only got that assignment of that company 2 weeks ago. 2 weeks, and he wrote a full report with a complete financial analysis, valuation, everything, and he presented it very well. That's what the Valuation Masterclass Bootcamp is all about, is developing these skills so that you can immediately add value at work and in life. So if you want to build a competitive advantage in company valuation like Alok has done, join us in the next boot camp. Just scan the QR code or go to valuationmasterclass.com/bootcamp and type in BC22 live for the coupon code. My name is Andrew Stotz, and I want to thank you for joining, and I hope that you build a competitive advantage in company